So one of the most common questions I get is, what mortgage is right for you? And again, not every mortgage is right for every single person. What may work for your best friend or your mom and dad may not be what works for you. So whenever you're talking about getting a mortgage with people you know, don't rely heavily on, oh, they got this rate, or they only put this much money down, or whatever the case may be, because again, everybody's situation is different. There isn't one square box with a square peg that everybody fits into. You may have the best property, but not the best credit. So you may have to do something different. You may have the best credit, but a condo or a mobile home or a property that is not easy to finance. Again, totally different. You could be self-employed and show income on your taxes. You could be self-employed and not show income. So there's a lot of different things and a lot of different programs. So I'm going to start talking with basic programs. The first one everybody thinks about is your regular, vanilla, conventional mortgage. You can put 5% down. Usually people put 10 to 20% down. If you put less than 20% down, you have mortgage insurance on your property. If you put more than 20% down, you don't. Again, traditional, we call them Fannie and Freddie. That's who does our guidelines. This is for people who work a basic job, have worked there, have decent credit, and by decent I mean 640 or higher on your credit score. No lates, no problems there. All the money is your own money that you're putting down. Anything like that. Just your basic, general, everyday loan. That's the first one. One of the next loans that is very, very popular and used a lot is the FHA loan. FHA is a government loan insured by the government. Doesn't mean they give you the loan, but they insure the loan. Kind of like a student loan. They insure, student loans insure you. And if you default, you then owe the government. Yes, you would get, the bank would try to come after you, but the FHA is insuring that loan. They take it over, and they would come after you if you don't make the payments. But anyway, FHA has more lenient guidelines. And by lenient, I mean credit scores can be lower, 580 or below. Not below, excuse me. 580 is a minimum score generally. If you don't have credit, we can build credit around you. If you've had a lot of different jobs, maybe not the same job for 2 years, they're okay with that. Maybe you've had different jobs in different lines of work, they're okay with that. They're very lenient with where your funds come from, whether it's a gift from a family member. You don't even have to have any of your own money into the deal. It can all be a gift or a grant, or a lot of times you can get assistance programs with FHA, things like that. So when you're thinking of FHA, there's a lot of reasons why people get it. Now, maybe you have 10% down to put down on the house, but your credit is not very good. A lot of times FHA will approve you where conventional may not. So again, FHA is not for bad borrowers. It's just more lenient guidelines. That's the way you need to look at FHA. Another one is VA. And of course, VA is for our veterans, for our active duty service members, or retired, or Coast Guards or reserves, but anybody who has been in our armed forces. And that is definitely for them, 100% financing, no mortgage insurance on that. Sellers can pay part of your closing costs. Sellers can pay off debts for you. There's a lot of different things. The main thing is when you think of VA, VA wants to make sure that the people that have served our country are taken care of and they get the most out of their benefits. And they want them to use your benefits. They want you as to use your benefits. So there's a lot we can do with VA. Very, very lenient on the guidelines and structuring of loans. So if you have a VA eligibility, call me. It's not hard to get you a loan. USDA loans. Don't hear much about those here in Florida. Most of the time it's not most of the time, all the time, it's in rural areas. So we do have some areas here in South Florida, places in Buckingham, out in East Fort Myers. The more you get into the middle of the state, Arcadia, Clewiston, that kind of area, LaBelle, that's where you're going to run into more of our USDA programs. And those are 100% financing. You can actually go up to 102% and use 2% of that towards your closing costs. So USDA, they do have qualifying ratios. They do have income guidelines, different things like that. So again, if you're interested in something like a USDA, it's more about where the property is located versus the borrower. If you are a self-employed borrower, a lot of times you have problems trying to find loans, but we do have loans for you. These are called non-QM loans. The reason they're non-qualified loans, basically they don't have the same guidelines as the Fannie Mae, Freddie Mac, Ginnie Mae, which does FHA. Not the same guidelines. I'm not saying they don't have guidelines, they do, but they are different. So say you're an FHA, or excuse me, a self-employed borrower, and you don't show any income on your taxes, but you run a lot of money through your bank statements, and you do that with your business bank statements. We can give you income based on the money you run through your business bank statements. Could be a huge difference in what you qualify for. Also, maybe you're a commissioned person and you get 1099s, but you write off a lot of your expenses. We can do straight 1099s. Use your income from that. Again, a lot more income for qualifying. So no ratio loans. That's for somebody who has, again, maybe you're self-employed, you only show a little bit of income, but we want to use it, we're going to use some of it, but we're not going to hold any ratios against you. The thing you have to remember with these are, generally you're going to need decent credit or good credit, 640 or higher. And again, based on the credit tiers, 640 to 680, 680 to 700, 700 to 720, that's going to tell you how much money you have to put down. Maybe with a 680 credit score, you need 20% down. Or maybe you need 15% down, but your rate's going to be 8. So keep in mind when you're doing these type of loans, your rate is going to be a little higher and your down payment's going to be a little bit more. So just remember that's generally what happens with those. But keep in mind, we can get you a loan. Whereas if you're using your bank or your tax returns, you're not going to qualify for anything. If you show losses for the last 3 years, we have no income. So again, it has ways to help you get into a house and also get qualified where maybe then you start claiming income or you do different things and we can refinance you into a traditional loan. But those are ways to do that. The last one I really want to talk about is a very popular loan. If you are an investor and you do investor loans, you want to buy a lot of properties, you buy Airbnbs, you buy annual rentals, you rent out duplexes, whatever the case may be. If you're not using a DSCR loan, you're killing yourself. With a DSCR loan, it's a debt service coverage ratio loan. What that means is we are going to take either the rental, the annual rental from that property, or the short-term rental, and that is what we are going to use as the income for that property. So if it's 1-to-1, if your mortgage payment is $4,000 and the rental income is $4,000, it qualifies. Now, you do have to have decent credit. Usually it's a 640 or a 680 or higher. It's not going to stop you if you have a 680 or a 640 from getting the loan. Again, what it's probably going to do is require a little bit more money down or a little bit higher interest rate. So DSCR loans for investors are the hottest thing out there now. And if you're an investor, call me, because they're going to save you a lot of time, a lot of headache, and just a lot of money. So, headaches, that's the biggest savior. And we can do them in your LLC, title it in your LLC. So, whole lot of stuff, a lot of good stuff for you. So again, if you're thinking you're not sure what loan you should get, and you think the same loan is for everybody, it's not. We're going to put that puzzle together for you, and we're going to figure out exactly what loan works best for you. So call me. I am your mortgage professional. I want to be your mortgage lender for life. So give me a call. Dawn Hall, Van Dyke Mortgage, 239-789-7561. And again, I want to be your lender for life.